In the last 3 years, ChargePoint stock is down from over $36 a share to $2.16 as of this recording. So a lot of investors are asking, where could ChargePoint stock be in 2 years? Is it just going to keep moving lower, or could it move higher in 2 years? That's the question I'm going to answer in this video, collecting several assumptions and estimates and numbers to predict where I think ChargePoint stock price will be at the end of 2025. So let's jump in, let's do this analysis, and let's come up with the stock price prediction for ChargePoint stock.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so one of the numbers I'm going to need is the current share price, which is $2.16 as of this recording. I also need the company's current price to sales valuation, which is 1.419. That too is down significantly in the last year and more. This company used to trade at a higher valuation. Now investors are willing to pay less for ChargePoint stock, not only for a market price, but also for a price to sales ratio. I also need the company's weighted average shares outstanding, basic and diluted. So this is the figure here, 376,182,783. But what you'll also notice is that year over year, from the same quarter last year till the same quarter this year, the company has added more than 30 million shares outstanding, roughly 37 million shares it added year over year, or shareholder dilution of 10%. So I'm going to assume another 10% shareholder dilution in 2024 and another 10% shareholder dilution in 2025. The reason I assume continued dilution for shareholders is because the company is losing so much money on the bottom line. They've got to get the money from somewhere. They've got to get the money from somewhere because they're losing money every day from their operations, and they're losing a lot of money. You can see here their loss from operations almost doubled in the quarter that ended October 31st to $153.7 million. That was up from an $83 million loss in the same quarter the prior year. So not only are they losing money, but they're losing money at an accelerated pace. And you can see that with operating income in a trailing 12-month period just straight down, negative 435 million, and getting worse. And if you look at cash flow from operations, a similar story, heading straight down and getting worse, negative 337 million. So they've got to get money from somewhere, because in their course of business, they're losing hundreds of millions of dollars, and that money is going to come from investors. It's going to come from investors, either lenders or stock owners. And so I need to assume dilution continues for ChargePoint. I also need its revenue forecast for 2025. And what I have here is the Wall Street consensus estimate for where they think ChargePoint's revenue will be for fiscal year 2025. And that estimate is 851.7 million. So Wall Street thinks ChargePoint's revenue will continue growing from 509 million in 2023 to 599 million in 2024 and jump up to 851 million in 2025. So I'm going to use this figure to make my estimate as well. All right, so let me draw your attention up here to the left-hand side. Diluted shares outstanding. This 376 million number is the number I got directly from ChargePoint's financial statement. I showed you that right down here. And then I added the 20% shareholder dilution in this tab here. So their shares outstanding, I'm estimating, will grow from 376 to 451 by the end of 2025. So if I take that 851.7 million revenue estimate and divide it by the number of shares expected to be outstanding, I get a sales per share of $1.89 for fiscal year 2025. So now if you come down here to the valuation estimate, here is that $1.89 sales per share estimate I made up here. And the price to sales ratio, this should not say forward. Let me correct this on the fly. This is just the price to sales ratio that we got from the current valuation, 1.419 there. So if this company achieves its revenue expected $1.89 for 2025 and the valuation stays the same at 1.4, then the stock price could be $2.64 by the end of 2025. Now, if you compare that to the current stock price of $2.16, that would be an increase of about 50 cents or about 10% per year increase in the stock price over the next 2 years. Now, that might disappoint some ChargePoint stock investors who are hoping that the stock price will recover back to these levels it achieved in 2021. Sadly, I don't think it's going to get there anytime soon. I think a lot of EV stocks in 2021 were way above where they should have been, ChargePoint being one of them, among many, many others. If you were reading my articles, I wasn't on YouTube in 2021. I was writing articles on stocks, recommending doing the same thing I'm doing here, but writing instead of making videos. And I was writing for the Motley Fool, so you can go back and check those articles. I was warning investors that valuation is too high for a lot of these companies, too much enthusiasm, too much hype, too much excitement for EVs, too much forecasting above where I thought was realistic. And so I don't think it's ever going to get back there, or I shouldn't say ever, but not anytime soon, not in the next 2 years, or I don't even think in the next 5 years will its stock price jump back up to those levels. There was just too much optimism included in those valuations. I don't think it's going to get back up there. Hopefully, if you're watching this video, you didn't buy the stock back then, and you're only looking at the stock now that the stock price is down over 90% off the high. It's starting to get your attention, hopefully. If you did buy at those levels, I'm sorry to hear about those losses. It happens to every investor. They sometimes buy these stocks at valuations that are way too high. That's why on my channel I talk a lot about valuation, and it's important to not overpay for stocks, even though you might think they have these excellent growth expectations, which ChargePoint does have. I showed you the revenue expectations for ChargePoint. They expect revenue to grow significantly from 500 million to over 800 million. That's nearly 60% revenue growth in 2 years. That's great growth. But that's not going to lead to profits. That's not going to lead to cash flow for this company. They keep losing money on every day they operate the business. That's more critical than the growth expectations. So, with all that being said, what if the valuation does increase to a price to sales of 2 instead of 1.4? What if they do make great progress on profitability? Well, in that case, the stock price could rise to $3.77. And what will lead to this increase in valuation is progress on profitability and cash flow. If they do achieve solid growth in those two metrics specifically, cash flow and profit margin, then investors may again become enthusiastic about ChargePoint stock. It's not going to be because of revenue growth. Revenue growth is not the catalyst that's going to drive an increase in valuation for ChargePoint stock, at least not in my opinion. If valuation decreases from 1.4 to 1, the stock price could fall to 1.89, $1.89. Or if it's even worse than that, at a valuation of 0.75, the stock price could fall to $1.42. My prediction is that ChargePoint stock price will increase over the next 2 years. It'll increase to a range between $2.30 to $2.50 is my estimate for where I think ChargePoint stock price will increase over the next 2 years. But even with that price prediction, I think ChargePoint stock is going to be volatile. So it may be way above that prediction or it might be way below that prediction. That's just my estimate, my base case where I think the range where I think ChargePoint stock price could be in 2025. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.